Good morning, investors and traders. And in today's analysis, we'll be talking about sector rotation, meaning how money is coming out of one particular part of the market and it is going back again in an area which has been immensely popular among investors and traders. So what we'll be discussing is where are the opportunities among the S&P 500, among the Nasdaq, and of course the Dow Jones Industrial Average, which is gaining more momentum, which is likely to gain more momentum. That it will be all part of this particular discussion. Before we do that, as always, it is important for me to go through this disclaimer very briefly, which is right in front of you. If you have any further questions, feel free to ask me. Now, a bit about myself. Guys, I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America. Currently providing services as a chief analyst to Trade. Now, what do I mean by the market is losing its momentum in one particular sector and money is flowing back into an area which has been very much leading the rally back in 2020, and of course not only that, but for the last number of quarters, or in fact we can say for the last number of years as well. Well, before we go and then start drilling into that conversation, what I want you guys to focus on our daily time frame for the Dow Jones Industrial Average, because the chart which is right in front of you is your Dow Jones Industrial Average chart. We have three different moving averages. We have our 50 and 100 and your 200 simple moving average. Now the concept behind that is very simple, and it is like as long as the price continues to trade above these moving averages, we can say that the bulls are very much in control of the price. However, whenever the price sort of moves below these moving averages, this is where we see most of the bullish momentum coming into place. So for instance, when the price came close towards its 200-day simple moving average on the daily time frame, we saw the prices moving sharply back to the upside because traders considered this one as an opportunity to buy. Similarly, when the price came close towards its 100-day simple moving average, we saw this massive momentum coming in. Traders considered that as an opportunity to buy, and after that we saw this massive momentum. Same thing happened over here. Again, the price came close towards its 100-day simple moving average, and then we saw this massive rally moving, pushing the markets to the upside. So in other words, what we can say is that the traders and investors consider the price as an opportunity the moment it comes close towards its moving averages. So we can clearly see that, and then we can clearly finalize by looking at the price action as well. Now, looking at the price, where the price is trading currently, what we could see is that the price is near is an important area of support once again as well, and that support is your 50-day simple moving average. That is where the price is trading. However, we do know that the price violated this particular moving average twice, and that happened very recently. So we are not going to pay too much of attention to this particular support area, which is right over here. In fact, what we are going to do is we are going to wait for the price to come into this area of support, which is considered as a better area of support. And something else I also want you guys to focus on, remember to going back on our conversation of how money is coming out of one particular sector. It is that Dow Jones Industrial Average, because when we look at the daily chart for the Dow Jones Industrial Average, one thing becomes very clear, and that is that it is moving away from its record high prices. So for instance, this was your record high price. The price did sort of come close to that one, but now it is clearly moving away from those particular areas like these record highs, and now it is moving to the downside. So clearly the money is moving out of the Dow Jones Industrial Average. So if you like, guys, always remember that if you like the content, please do smash that like button because it really helps us on YouTube's algorithm. Now, given the fact that the money is coming out of this particular sector, where is that money going back in? So that money which is leaving that particular sector is going into our tech sector once again. Remember, tech sector saw a massive sell-off when the Dow Jones Industrial Average was moving to the upside. So this particular move, which happened over here when the prices started to move to the downside, at that time we saw the Dow Jones Industrial Average moving to the upside. So the money was coming out of the Dow Jones Industrial Average, out of the Nasdaq, and it was flowing into the Dow Jones Industrial Average over here. Now the opposite has started to happen, meaning the money is coming out of a Dow Jones Industrial Average, and now it is going into the Nasdaq 100, meaning the tech stocks are becoming more and more favorable. Now again, before we do that, it just to confirm the same sort of a principle that on the daily time frame we have our three different important moving averages, and as long as the price continues to stay trade above them, we can say that bulls are in control of the price. Secondly, the moment the price come close towards important moving averages like it did over here towards this 200 simple moving average, they are considered as an area of support, an area where we could see massive bull momentum coming in. And at both of these areas, the price, whenever it came close towards this 200-day simple moving average, we saw that momentum coming in, prices moving to the upside from there onwards. Now the question really is, where is our next important area of support? That important area of support for now is going to be right over here where the 50-day simple moving average is trading. And in terms of our resistance zone, where is our next resistance zone? I believe that the next resistance zone is going to be just in around these particular price level, that 14,300 sort of a price level. So we're going to move these to this resistance zone to here, and we will wait for the price to come into this important area of support. However, as the price is trading above its previous all-time high, that previous all-time high was over here, so the price does have the ability, the price can potentially see some sort of a resistance coming into right into this area where the price is trading currently. So we may not have to actually wait for the price to go back up. Why? Because the RSI over here is showing that the prices are overbought and a retracement is due. But of course, the prices do change, and that means that you need to be aware of when the next video is going back up, because the moment the price action changes its direction, we kind of put our new videos out there. And if you are subscribed and if you have hit the bell icon button, you will get all the notifications directly in your inbox. So to summarize, what we are saying is that the money is coming out of the Dow Jones Industrial Average. It is sitting near a support zone over here. A better level of a support zone is near its 100-day simple moving average. The money is flowing back into the Nasdaq index, which was one of your weakest index before, no, but not anymore. Now the Nasdaq is back on fire. It is moving to the upside. An important area of support is over here. The prices can retrace from its current level because RSI is showing oversold. However, our important area of support at the same time is going to be near 14,300 sort of a price level, and that is this better area of resistance. Once again, if you like the content, smash that like button and do let me know, are you long or short on Nasdaq or on Dow Jones Industrial Average? That's all for now. See you guys next time.